I think there are a huge number of challenges facing organisations. First, they've got to deal with the economic situation, and how they react to that, I'm sure, will manifest itself in further restrictions in the money that they can spend, both in terms of capital expenditure, but also in terms of headcount reductions they have to contemplate. I think the other issue is that anyone who's facing any element of financing or refinancing is going to find it extremely difficult. That's not to say it's impossible, but the terms of trade have moved and are continuing to move against borrowers, and that will be a recurring theme throughout 2009.
Availability of credit. The banks across the UK and indeed globally simply aren't going to start lending anytime soon. They're not going to start providing new money to organisations that have anything other than an absolutely blue chip background and the strongest business plans.
And we saw some quite alarming examples of banks seeking to take advantage of clients who, whilst having difficulties, were certainly solvent and continuing to trade. We had one example of a retailer where the banks charged a 10% fee for a 6-week waiver. That cost the company £7 million, but it really didn't have an option. Where could it go? We had another example of a company where they simply asked to renew their facilities. All their lead banks were prepared to support it until one of the principal lead banks went to credit committee and came back with a completely different set of conditions. The interesting thing in that circumstance was the other banks actually beat up on them rather than the client, because actually they thought their demands were outrageous. So we're continuing to see poor bank behaviour, we're continuing to see inconsistent bank behaviour, and the one thing you can't do if you're a client going into negotiations with lenders is actually assume that they will perform to any prescribed plan.
And there's a lot of uncertainty for companies to deal with. There's uncertainty about market demand for their products or services. There's uncertainty about the exchange rates, particularly for UK companies. There's uncertainty about the continuity of suppliers, the uncertainty about whether their customers are going to make it, uncertainty about what their stakeholders are going to expect of them, and of course the uncertainty that everybody is thinking about at the moment, which is how long this downturn is going to last. Is it going to be the first half of 2009 before we see green shoots? Is it going to be into 2010 or beyond? What's that going to look like? Our clients who are responding most effectively to the challenges that they're facing are the ones that are getting on the front foot. So the organisations that really have a handle on how to forecast well, and forecasting well in uncertain times doesn't mean getting the answer right, because the chances are that no organisation is going to get the answer right for 2009. Forecasting well in this environment means having very good systems that allow you to test a variety of different scenarios and understand how you're going to respond to those scenarios and put in place the plans that you need to be sure that you are going to respond at the right time. That's what good forecasting means in uncertain times. So a number of our clients are already thinking about what shape they need to be to face through this recession. So they're looking at, if this is a 12-month downturn, a 24-month, a 36-month downturn, then we need to be this shape or this shape or this shape. And they're putting in place the plans and getting it started now. They're making decisions now that they'll get the benefit of in 24 months' time because they are taking action ahead of their competitors. And frankly, when you're moving down, when the whole market is moving down, it's those organisations that respond most quickly, most decisively, that will benefit greatest in the long term. We are going to see M&A activity in 2009, 2010. The feature of an ebullient market is that there have been a lot of roll-up groups, developed through a series of acquisitions funded by debt, supported by private equity. And I think we're going to see quite a few of those groups starting to be broken up, not necessarily through insolvency processes, but because it makes sense and it allows debt to be repaid, reduced gearing and so forth. And so I think there is going to be an unbundling strategy that we see begin to emerge over 2009, 2010. we're definitely going to see prices falling.
I think the difference between 2008 and 2009 is we had a first half of 2008 where people were sort of working through the problems, and I think there was a expectation that, don't worry, it was difficult but would be all right. I think the latter half of 2008 saw a startling realisation that there was a problem, and a major problem. Now in 2009, I think there'll be a willingness to get on and sort it out.